Hello, everyone. Welcome back to an episode of Coach and Benway podcast. I am your co-host, Dr. Benway. My co-host is here around somewhere. Make yourself known. Make them know you're alive.
Hi, this is Coach Red Pill, and we're going to be talking about something pretty interesting. We're going to be talking about there was a recent meltdown by Elon Musk over at Tesla fame, right? Tesla and the flamethrower and Rocket X, or what's it called? SpaceX, right?
SpaceX, yeah.
Yeah, he's everybody's favorite billionaire. He's the guy who made his first big money on PayPal and took that money, those billions that he got when he sold off or whatever, and used it to build Tesla, and then the SpaceX, and then that flamethrower, which is pretty cool, actually. And he had a meltdown with, a conference call that he was on with investors. They were asking, when are we going to see our money back? And everybody's very worried because Tesla doesn't have that much cash left in the kitty. And a company like that, what they're basically doing is that they're bringing in investor cash and burning through it. They're not making revenue by way of their operations, by way of sales. Now, we're seeing this in a lot of companies, not just Tesla, but we're also seeing this in Uber. Uber has in the whole something like $4 billion last year, that the cash that they burned through last year, okay? I mean, basically lost. That's what we're talking about here. They lost $4 billion. And some people have pointed out that, every time you're on an Uber, roughly half of the cost of your Uber trip is being paid for by investors in Uber, okay? The ditto is happening with Netflix. To a lesser extent, this is happening with Amazon, though no longer the case because Amazon is, correct me if I'm wrong, Benway, Amazon financially is getting there, right? I mean, in terms of revenue?
And they're doing what I anticipated them doing. They're actually raising prices on their Prime services as well. I think I forget what percentage. It's notably bigger. But they're because in similar situation, it's because Amazon's been in this longer, where Jeff Bezos has a vision. I'm going to build up this all big thing, and the investors are finally saying, "You've been at this a while enough. Give us our fucking money back." Yeah. And he's smart enough to know, okay, I got to give him something. Yeah.
That's basically what's been going on.
And he's had a lot of financial success with AWS. So Amazon Web Services is their cloud hosting environment. A lot of small and larger companies use them to store websites, data information, what have you.
Including the CIA, by the way.
Including the CIA. So, there's only a few pinch points in terms of that industry of like big cloud aggregators in terms of data. Amazon's one, Microsoft and Google are the other two that I can immediately think of. There may be one more. But yeah, Amazon's been really doing well at that, really good financially. They're finally reporting those numbers, and they were much better than people thought. So Amazon has good streams right now for that. So they're a little bit of a, good boys in the crowd. Those other companies you had mentioned, not so much as of right now.
Yeah, Netflix burned through $2 billion in investor cash last year. That is 2017. I forget the number for Tesla, but Tesla wasn't it like $4 billion the last quarter? It was a shit ton of money.
It was absurd how much money goes their way and from investors. Yeah, absolutely.
Yeah. So Elon Musk, he has a conference call with investors, and he basically blows them off. He tells them, fuck off. That's a boneheaded question, motherfucker, and treats them like garbage. I mean, he actually used that kind of language, apparently.
Yeah, he basically said, I have no time for the dumb or stupid questions. Yeah. The dumb or stupid questions being, when are you going to be profitable? I'm sorry, investors.
They're dumb that way.
Investors are dumb. They want to know that they're actually going to get a return on their investment. Now, I know I got a lot of friends who think that, hey, Elon Musk has a great vision. Why should he address the peons? And my attitude is this: look, I actually agree. Yeah, his SpaceX vision as a vision is useful, but in the near term, he's got to make the fucking money. Yeah, and because he's been betting on the fucking cars and all these other industries. I don't care how nice the car looks. I frankly even don't care how cool the fucking fire pack is. He's got to deliver. And frankly, if you were just talking about electric cars, I can go to, I can tell you GM, Ford, all those guys have at least 6 or 7 models at all various price points to get into this market. Elon hasn't even really started delivering on the lower tier cars that he said he was going to. Yeah. This is the makings of his shit show are becoming very obvious right now at Tesla.
Yeah. And there's the reasonable people are starting to think that Tesla's days might be numbered, partly in fact because of his arrogance. Because at the end of the day, if you are investor dependent, that means that you're dependent on the goodwill of your investors. If you're burning investor cash in order to build your business, and you piss off your investors, they'll just cut off the money spigot. What are you going to do? Go and twist their arms somehow? They're already starting to think that the money's at a loss. So fuck it. They're not going to throw good money after bad.
And also, let's not forget some of the context here that I think is interesting. Now, I wouldn't say that Elon Musk is anywhere near what happened at Theranos, but the Theranos debacle is in everybody's mind. So those who don't know, Theranos was a sort of biotech company who said through their technology and software, they were able to, through blood tests, get all sorts of tests that ordinarily would take a lot of time and money and do it more efficiently and quickly. And it turns out underneath it was a fucking scam.
Yeah.
And it was, people were saying, oh, but the other thing, it was the first, women-led CEO of a big tech company that was really huge in a way that people thought she was, great
and
hot
they
shit.
They gave her such a pass because she was that pussy pass. I mean, paid off for her in spades. If it had been a guy, they would have nailed that fucker to the floor. I mean, man.
The SEC just slapped her on the wrist. And we're talking about billions of dollars of we're talking serious
real damage.
Fraud.
Real damage
here.
Yeah.
So, do I think Elon Musk is defrauding people that way? No, I don't think so. But I think people who got burned on that are saying, okay, I want something that's going to fucking deliver here. And yeah, I don't think you're a scammer, Elon, but I need confidence here. And I need to know that something's going to go. And you calling the fucking analysts a bonehead because they want to know when it's profitable. You are not instilling confidence.
No, not at all. And here's the obvious issue. I mean, just to lay to rest the issue, the Theranos product. And by the way, I always kept calling it Thanatos. The Thomas Pynchon cult of death, right?
The reference.
The reference, right? Thanatos is the god of death of Greek mythology, right? Or something like that. I forget.
Thanatos. Yeah, Thanatos. Yeah.
So anyway, Theranos, right? Their product was actually fraudulent. Whereas, Tesla cars, they run, okay? I mean, they occasionally burst into flames.
Sometimes they burst into flames, sometimes
burst into flames,
but they fucking run.
Yeah, exactly. No, kidding aside, they actually deliver a quality product, actually. I've happened to drive one of them, and it's a quality product. It's worth its money. But the point I'm trying to make here is that, nobody's arguing that Elon Musk is defrauding anybody. But this model of taking investor cash, because right now, investor cash is cheap. Okay, so investors are desperate for yields, and so they're throwing money at anything that has the prospect of delivering a yield, a big yield. If not now, then they're willing to wait. Okay, and so a lot of companies have been, taking investor cash in. And for those of you who aren't very sophisticated or don't understand, it's very, very simple. You see, a business, how does it operate? You go out and you sell your product or service, whatsoever it may be, right? So you go out and you sell your product, and the sales, the money that you get from the sales of your product is your revenue, right? And you take your revenue and you pay off your suppliers or the people who work for you or whatever it is that creates the product. And then the difference between what you sell and what you pay off that's your profit, right? Now, for a company that can potentially have a very, very large market, what happens is that, a company goes out to investors and says, give me your cash and I will pay you in the future. But with your cash, what I will do is that I will build a lot of my product and I will potentially sell it at a lower cost than its actual cost. For instance, in the sake of Tesla, the sedan that sells for, I think, $130,000 or something like that, its actual production cost is closer to $250,000. Who's paying the difference in price is the investors, because nobody would buy a $250,000 electric car, but a lot of people will buy a $130,000 electric car. And so since Elon Musk and his team at Tesla know this, they realize they have to put the price point at 130, and the difference, from investors give them the money, and they spend a few years building the factory and all the rest of it. And so the investors are losing money in the short term with the expectation that in 3 years, 5 years, even 10 years, Tesla is going to make enough money to repay them the money that they invested plus a nice hefty yield that will have made it all worthwhile. Now, what's going on is that, investors are starting to lose faith, because ultimately this move, it depends on the faith of the investors, the belief that the investors have that this is the best way to achieve yield. That this investment, if I throw money into Tesla, if I throw it into Uber, if I throw it into Netflix, in 2, 3, 5, 10 years, I'm going to get that money back plus a nice premium that will have made all the pain worthwhile. But if you start to lose that faith, companies like Tesla, like Netflix, like Uber, they get fucked because they all of a sudden they wind up without any cash to continue operation, and all of a sudden the whole fucking machinery grinds to a shuddering halt. Okay, this was a little parenthesis just so that those of you who don't know will understand what's going on.
And to that, I just want to ask you a question that's related to that. I think it's even more than just the equity holders that are concerned. I'm like, right? Aren't the bond holders or basically people who have a higher priority and getting paid off?
Yeah.
I think even they're starting to get concerned too.
Yeah. Because by the way, so again, for those who don't know that much, equity holders are the people who actually own the stock in the company. They are the people who actually own the company, right? Because you add up all of the stock of a company, and that 100% of the stock is 100% ownership. You own one fraction of the company if you own one share of that particular company, right? In bankruptcy, the people who get paid first are the people who the company owes debt to, okay? And the people who get paid last are the people who own stock in the company, right? Now, the people who are owed money, the bondholders, because bonds are debt instruments, they're not shares, they're not ownership in the company, it's just debt. They have the highest priority. Now, if those people are worried that they're not going to see all of their money, then if I were an equity holder, I'd be shitting bricks right now. I mean, that's fucking worrisome.
You don't want the guy who's going to get paid before you nervous, because that means you're even more fucked because you're the last guy on the totem pole.
So you'll get zero for your investment.
Exactly. And if this is in fact the case, I don't know 100% that this is the case, but let's say it is. Elon should also be worried because it's the creditors who are ensuring that your day-to-day cash flows are up to snuff. Yes, the equity guys have thrown in money at you, but they have thrown in money at you from a certain point in time.
Yeah.
The bondholders and your short-term creditors, your lines of credit, those are the stuff that that you cycle through. You pay them off quickly, and the cycle repeats itself. If those guys start saying we don't trust you here, you're in a deep shit situation.
Yeah.
And this is one of those things where, especially for Elon, yes, there's the equity guys need to know, hey, long term, are you going to really deliver something that I'm going to get the high yield on? And then the short term guys, like, are you going to, do I have confidence in the day to day that you're going to do some right decisions here? The less confidence you have in a CEO's ability to keep the ship steady, the more concerned those short-term guys are going to be in particular, because this guy's out to lunch. Now, the thing that I don't know, because I think this is where they're in a pickle with Tesla in particular. Tesla is a company that's so bound up in a guy's vision that I don't think it's easy. It's easier said than done to say, well, get Elon out of there and put someone who knows what they're doing in there, because Elon's constructed it in such a way it's Elon's company.
Yeah.
So that's the challenge that they're facing.
Yeah, because he basically copied Steve Jobs' model. Okay, because Steve Jobs created Apple in his own image, especially after he came back in '96. So I'd be very concerned. I mean, look, if I'm a bondholder in Tesla, I'd be worried. If I'm an equity holder, I'd be terrified. I'd be looking to get out. How's the? I don't actually even know if Tesla is on the open market. Is it?
Oh, they're a stock, and the stock actually tanked after Elon made his, shall we say, opening salvos to the analysts.
You don't think it was some sort of ploy in order to scoop up some stock at a low price?
Oh, I mean, it could conceivably be. So, May 3rd is when he had his investor call, and he went from $300 a share to $279 in, shall we say, a few hours.
Yeah, 7% drop.
It's subsequently gone up to 294 or something.
Okay.
So the stock's kind of going back. So the market's kind of adjusting to that. But that's, needless to say, that's a scary little
dip,
situation, because nobody wants to see that.
Yeah, because like a 3% drop in a day, that's like, what the fuck happened? But a 7%, that is really, that would scare me. Okay, and I would suspect that somebody decided to act as their own plunge protection team.
Mm-hmm. And now, because what's happening, and that's what Elon's getting into now, is people see, hey, Tesla may not be in a good state, so they're doing what's called a short. All a short is you're betting that the stock will underperform at a certain price point that you had bet on. Yeah. In other words, you're saying if it goes below what you think it's going to go, and what I think it's going to go, you pay me the difference, extra money kind of thing. That's what it's like an insurance policy that people are using in a sort of profit-seeking kind of way.
Yeah, and like Elon Musk tweeted out, by the way, Trump is setting a horrible precedent because everybody's doing the fucking tweet thing. But Elon Musk did the whole Twitter thing of basically saying that, the what did he say, the exact language? It was anybody who's going to Short, Tesla is going to suffer unreal carnage, in his words, quote unquote, unreal
Yeah.
carnage. Okay, when a CEO of a company starts taunting short sellers, you know he's in trouble. Okay.
Well, the funny thing is, as soon as you mentioned that, the guy who came to my mind who made this exact same argument, and it's a guy you never want to be compared to, is Dick Fold. Who,
Oh God, yeah.
Those of you who may not remember, Dick Fold was the CEO of Lehman Brothers, and for that month before, I think it was September 15th, 2008, was when Lehman folded.
No,
That's odd that I know that.
earlier. Didn't it fall in July? I forgot. Okay, it doesn't matter.
No. I think no. But Bear Stearns was in the summer.
No. Bear Stearns was in 2007 or
Who am I
2008.
thinking of?
No, you're right. It was Dick Fold over at Lehman Brothers. Yeah, he was the one who kept taunting the short sellers until Lehman went broke, and the Treasury Department was like, ain't gonna save you this time.
That was his running thing. Well, Lehman was still potentially could have served, or at least in his mind was a going concern. He says, he would go on like Jim Cramer's show, and he says, you got to talk about these fucking short sellers who are going after me. And I think Cramer said, yeah, but your fundamentals aren't really instilling confidence. I may be paraphrasing it a little too much, but that was this kind of situation we were in at that point. And you absolutely, you do not want to be compared to Dick Fold with people who know, that kind of situation.
No way. But it's like, okay, bottom line, the lesson is that whenever a CEO is trash talking the short sellers, the company's in trouble. Because when the guy is actually confident, he keeps his fucking mouth shut. And he just waits for the pop in the stock to unload his own. Because what happens is that, see, when a bunch of people short a stock, and then the due date of that short starts approaching, they all of a sudden realize that they're going to have to come up with a stock to cover their short, okay? That's called a short squeeze. Because what happens is that all these short sellers realize they have to deliver these stocks, they're going to suffer a loss, and they better buy the stock now before it keeps on rising, basically anticipating the other short sellers who also have to buy. And so all of a sudden, all of these short sellers go out to buy the stock to cover their position, and as they buy it, they start bidding up the price more and more and more. And sometimes it's like a little bubble. Because see, the short sellers, say, for the sake of argument, stock is at $100, and the short sellers en masse in aggregate think that price is going to drop to 90, hypothetical, okay? So they all, put their strike price at 90. Okay, 90 and below, they're going to make money. 90 plus 90, they're going to lose money, right? And so the company is at $100 a share. And as the date of the shorts it gets closer and closer, see, the short sellers start to realize that they are going to have to cover their shorts. That is to actually deliver the stocks that they have shorted by that date. And so they realize it's 100 now. I better buy it at 100 now, because if I wait till tomorrow, it'll probably be at 101, because there are going to be other short sellers who are also going to be buying and beating up the price. And so the stock, instead of remaining at 100, which is the actual price, it goes up to 101. And that triggers the other short sellers to also start buying, and it goes up to 102, 103. It starts going up, even though its natural price would be just 100, because of these short sellers. And so what happens is that somebody who realizes that the short was incorrectly made, say, for instance, somebody like Elon Musk, who has a very large position in the stock of that company, right? They shut the fuck up, because as the price starts to go up, as the strike date approaches, the price starts to go up and up and up, 101, 102, 103, and so on. Say it bubbles up to 105, 110, for instance, just for the sake of argument in this example, in this hypothetical. The owner of the shares will sell at 110, okay, to the short sellers. And then when the price starts to go back down to its natural level of 100, they'll buy back the stock that they sold at 110. They'll buy it back at, say, 105, 101, 100 even, okay? And they will have made the difference off the short sellers, okay? So when you know that your company is fine and there are a bunch of short sellers, you shut the fuck up, because you're going to make money. And if you tell them that everything is fine and the short sellers are wrong, then you're not going to have a short squeeze where you can profit off the short sellers, okay? That's why. I mean, Benway and I know this stuff because we've been around finance so long, and perhaps this is an explanation that a lot of you will know already, but some of you perhaps don't, and that's why I went on this little tangent here.
No, it's healthy, and I think it sets a good context for what I think is an important characteristic of a CEO, and I've seen it many times. Part of it is a confidence game, and I don't mean trickery per se. Yeah. That's not what I'm saying. It's part of it is instilling a sense of, hey, I know how to keep this ship right. We're on a good path here, and one of those skills that you really need, and I've seen it many years now is when you're on those conference calls and you're talking to those analysts, you have to bring your fucking A game and be facile with facile or have a facility, a facileness with numbers and where your company is that, other people probably wouldn't be able to do so quickly. It's a tough, gig to actually sit on those calls and be successful.
Yes.
So to go into that situation almost like either like a dismissive aristocrat or like a bear in a china shop or a bull in the china shop, excuse me, is a dangerous game to play for that. And, does that mean that Elon knows that his company is under stress? Probably. Does it mean that he doesn't fundamentally care? Well, maybe, but, he should be fucking caring at this point. It's going to be an interesting dynamic to see play out. I ultimately don't know. I haven't had much confidence in Elon beyond appreciating that, this as a species, we should be going into space, but his little journeys to the moon are neither here nor there on that front at a grand scheme of things. But to keep up that momentum, I agree, is useful. But overall, I have a sense that he is there's something off about him as an investor that I wouldn't want to be directly involved with. I know he's got a lot of catchy things and has there's a slickness to the guy, but I got to tell you, I've seen so much slickness in the tech space and everything that I've just trained myself at this point to see past it. Yeah. And you have to see past it at a certain point.
Yeah, because I agree with you that there's been a vibe on the guy for a while that he is, how can I put it? It's not that he's not serious. I think that he fundamentally knows that long term his businesses are a bust. I think that he realizes that, and he's realized that for a while. That's my suspicion, okay? Of course, I can't point to anything, but you see, when you're in a business, in any business, and you're seeing it on a day-to-day basis, you get a sense in your balls, in your guts, how the business is, okay? And sometimes, if the business is too attached to your name, then it becomes an issue of your own rise or fall, okay? And as in the case of Elon Musk, he can't sell Tesla. He can't sell his, ownership in SpaceX because he's too identified with it, and that's perfectly fine. Some people are always going to be identified with a particular business. For example, Jamie Dimon. We were just talking about him before we did the podcast. Jamie Dimon over at J.P. Morgan. He's always going to be identified with J.P. Morgan. He might step aside and be replaced by somebody else, but that's his company, right? But other people, like say, for instance, Warren Buffett. They buy shares in this, they buy shares in that, they might buy outright a company, but he's not identified with the company. So he has much greater freedom of movement, okay? And he can act much more rationally, which is the point I'm trying to make. Because when you are closely identified with the company, your fate depends on that company. And if you sense in your balls, in your guts, in your head, your heart, when you realize that the company is just not going to be a successful one long term. And by the way, every experienced business person, they recognize when a company is going to make it long term and when it's not. They recognize when it could be in dire straits, but it's going to see the promised land. And they recognize that, oh yeah, things are going great, but long term, 5-10 years, it ain't going to happen. I suspect that Elon Musk knows that all of his projects, are all fundamentally busts. You know what I mean? That's the vibe I get from the guy. He's sort of like, Tesla has always struck me as like the Tucker. You ever saw that movie Tucker, or The Man in His Dreams?
That's actually a very good comparison. It has a lot of great ideas. It's for the time and place. And that's what I think is Tesla's problem. It's too
ahead
much
of the game.
Too ahead of its game and still too luxury right now.
Yeah.
Because in order to be big or at least successful at a certain scale in motors, you there will always be the high end guys of the world. But often, guys, those high end brands are tied to other portfolios or a piece of a portfolio. When you're the only only thing you've got is a high end car, and you're having fundamental core technology changes that you want to take advantage of, you have to start penetrating into other markets. And I think just the other big motor guys just see that, hey, we can actually play very well in a lot of the core market, the core average consumer market for an electric car. That's the thing that worries me more than anything else. Like, I know people say, well, Ford has shitty engineers, or GM doesn't have great vision. It's like, no, it's
it doesn't matter.
Engineering friends of mine have this problem. They think that the vision and the perfect product are what sell, and 90% of the time it's not. It's what meets it. What's the most cost-effective, best way of meeting what I need. This is why McDonald's coffee does well, because it doesn't have to be the best coffee for its price point. It does the job well.
Yeah, exactly. Well, there's something else that and by the way, earlier in this conversation, I was thinking, was it public or not? And I'm like, of course it was fucking public. And I've known this. It just slipped my mind because I just remembered a little tidbit. A while back, Tesla was valued higher than fucking General Motors. Now, General Motors has a lot of fucking problems, no question, but it is the largest fucking car manufacturer on the face of the planet. Okay, let's not fucking forget that. And this piddly little shitty company, Tesla, it's valued more than General Motors. What the fuck is that all about, right? It doesn't make any sense. And I think that just like engineers who overvalue things that, bottom line, don't really affect sales, a lot of times investors overvalue shit that long-term does not affect the valuation of a company. Okay.
And I think that's like a bigger theme of this episode that we're kind of talking through, because I've felt this for a bit of a while, and this is just me speculating here. I've had the gut feeling that there's a lot of overvaluation that has been going on in tech recently.
No, not just tech. The whole fucking thing. The whole fucking thing. I'm talking about the whole global. Look, and this overvaluation, why are we mincing words here? We know exactly why everything is so overvalued. It's because the goddamn central banks have been giving out free money like fucking, Quaaludes at a disco party in the 1970s, right? Free money. And so what are people doing with the free money? They're going out there and buying assets and inflating the prices of assets, okay? This is the same fucking problem that happened with the housing market during the 90s and the aughts, right? Low interest rates led to the ballooning of the price of properties because there was so much money that you could get from a loan, from a mortgage loan, that people just bought up the prices of the houses, right? They weren't realistic. The same thing is now happening in corporate America. All these goddamn fucking companies, their price to earnings ratio are fucking absurd. It's like 30-1 at this point. What's the average on the S&P 500? It is like 30-1, isn't it?
I think so. I don't have the numbers in front of me, but that sounds believable.
Yeah, when I was growing up, when I was a kid, it was like between 10 and 15-1. Okay, and we're doubling that. Okay, it's not financially reasonable for a company to have a 30-1 valuation, but that's what's going on. It's because of the goddamn free money, because the Federal Reserve is just handing out that money, because of course they need to hand out free money, because if they ever raise rates, the U.S. federal government would not be able to meet its outstanding treasury bond obligations. The U.S. federal government would go fucking broke, and they can't allow that. That's why we've continued on this low interest rate course, and that's why you have these problems that we're seeing now. Okay, look, this is my thinking, okay? Now, Benway, you fight me on this one, if you will. I'm ready for bear insofar as this argument. And the argument goes as follows. In 2008, we suffered, the overvaluation of the housing market. That was the crisis. In short, I mean, in the basics I'm talking about, right? I mean, there were a lot of things here and there, but basically it was the housing market tanked, nobody wanted to buy the goddamn houses, and the whole system crashed, right? The next crisis, it's going to be fucking corporate debt, okay? Everybody took on this free money. What did a lot of the companies do? They took on the free money. They artificially inflated the stock price by doing stock buybacks with this free money that they were getting, and that's how they were able, all these CEOs, to get these big bonuses, right? But this corporate debt, it's bad debt. They can't really service it. That's the next point of contention. That's going to be the next crisis, the one that I think is going to happen in the next 2-3 years on the outside. And then after that, it'll be treasury bonds. That treasury bonds, they will not be, the federal government will not be able to service them. I'm talking also state and municipal bonds as well. I mean, just shoving them all in there. Government debt, basically. I think that 3 crises will be, housing in 2008, corporate debt in 2009, 2010, 2019, 2020, 2021 perhaps, and say another 10 years after that, the government debt. The government debt collapses, and that's that for the American economy. Fight me on this.
You're going to be pissed at me. I don't know that I am really in disagreement here. I mean, if it is, if it's only about timing of certain things.
Yeah.
So,
okay. I mean, I'm of course kidding over the fight me issue, but in terms of my argumentation, do you think that it is reasonable argument insofar as the financial future of the United States and of the Western democracies?
So it's certainly reasonable. What'll be interesting to me is like which areas kind of like hit it first, because I think with the corporate debt issue, some companies are going to be able to handle it sooner than others. So it's going to be, in my mind, is there going to be a particular industry that's going to really be the starting off point for it? I don't know which one that would be. I can certainly think of a few that might already be in a position to kind of highlight it. Tech, obviously, being one.
Tech would be.
I also think though that some of this municipal debt could have, that problem could happen even before the corporate debt. I think in particular a few states are on my radar.
You're thinking Chicago and Illinois, right?
Well, that's certainly one. I think California even bigger.
Yeah.
Because that's Illinois for sure, because we mismanage the fuck out of everything. But California mismanages, but it's bigger. It's the sixth largest economy in the world. Yeah. So, that kind of...
They fuck up on a bigger scale, yeah.
Exactly. And I think, and it's just, that's of all the states, we're bad, but I feel like we're like contained bad.
But going back to my argument, I mean, the issue of corporate debt, because nobody's fucking paying attention to the goddamn corporate debt issue. And that's the thing that has me incredibly worried, because these companies, they're taking on debt they have no business taking on, strictly to prop up their share price and get the fucking bigger bonuses at the end of the year. I mean, you see that. I mean, I know that you do. I know that that's one of the things that you've been watching, right?
Yeah, so there's a few things that are on my mind that I'm trying to see how they will all play out. One, broader term, like moral hazard stuff. I've still yet to see risk-adjusted returns factored into corporate executive compensation. So we still haven't learned the main lessons of 2008, and of course we never will learn that. The other thing that I don't know that it will affect things or not, but it's been on my mind, is those few companies that have mountains of cash to burn but have been sitting on it. I wonder what the fuck are they going to do? Where are they going to put it? And are they going to accelerate any of this? Like, hey, we're going to throw some more, cheap debt into the fire, or are they going to act as a counterbalance to anything? I have no idea what that is going to be, but it's certainly been on my mind for a while. Apple being one of the biggest guys out there in that, I don't even know how much cash they've got on their hand.
No, I don't know, but they've been giving money back to their shareholders hand over fist. I mean, they've been giving back a lot. Yeah. So I'm figuring that they must have been like collecting that cash, thinking that they might need it for some reason or another, and figuring, fuck it, we don't really need it, so let's give it back to equity holders, because they've been giving huge dividends as of late. I mean, just going through that cash and for that purpose alone, right?
Yeah, I mean, I haven't been paying attention as to how big the yield on the big the dividend is, but they have the cash to do it, so why not? In fact, arguably that's what the company should be doing. This hoarding of cash, and even if you're not giving it to your equity holders, that's why equity holders put their fucking money in you. So you should be arguably doing that. But yeah, in terms of your broader issue, like where is the corporate debt going to first expose itself? Obviously, when you have guys like Elon and you have the Theranos situation come up, the excitement, quote unquote, of the tech industry certainly is an area of watching for me, not the least of which because I think on top of everything else, I think in particular the Silicon Valley's edge over all the other various technology markets, both domestically in the US and externally to the rest of the world, seems to be losing it a little bit. By that I mean I'm increasingly seeing equal amounts of interesting innovation outside the Valley as in, maybe even more so. And I think when you have players like in China who are no longer or starting to move beyond just pure copying into coming up with their own shit, India, conceivably being another potential area, not quite yet, but certainly getting there. And Silicon Valley is so obsessed with SJW entryism, especially in the likes of Google, but all of the companies kind of think this way. I feel they've been resting on their laurels for long enough to where the pinch is going to start happening in a big way. So I think that may very well accelerate some of these situations, because the smart money will say, hey, you guys aren't maybe the best players I could have made in terms of spending my tech investment dollars. Maybe I'll go somewhere else. So that could very well be a version of that.
But sorry to grind on this. It's something that I've been thinking about. But you're actually the first person that I've sprung this whole argument on, that it's been a progression of debt. basically housing, which is domestic debt. I mean, well, personal debt, then corporate debt, then government debt. That they will each blow up in turn. I mean, that argumentation and the reasons why, the reasons being, of course, that the central banks have been giving out cheap money, that is low interest rate money, for far too long, and that all of these different players have gorged themselves on this cheap debt, and then finally they got to a point, the Minsky moment, when they simply could not take on more debt at the levels that they were doing. It simply became untenable. Does this seem reasonable that we have successive Minsky moments, first for the retail sector, the mortgage sector, then the corporate sector, which is to come, and then finally the government sector, that each will have its Minsky moment? Does this argumentation make sense to you?
It makes enough sense to where I want to keep watching it to see how it will happen. I mean, let's be brutally honest here. Independent of where it comes from, we know every 10 or so years there's some sort of recessionary downturn for whatever reason. We know what the last one came from. The year before that, it was a tech bubble, ironically enough, in the
2001.
Exactly. So, and this keeps on happening, and we're approaching that time where it's about time to come for it. In fact, I think people were kind of expecting it with the around the time of the 2016 election. It's been postponed for interesting reasons, but it could still very well be coming.
What do you think Trump's influence on the overall economy has been? I mean, I got into an argument recently with somebody very stupid, saying that the budget that he signed, I thought it was catastrophic. I thought that the kind of deficit that we're going to be looking at, $1 trillion a year within 10 years, within 5 years, I thought that was horrifying. And he was like, oh, God Emperor knows best, and the Laffer curve and shit like that. What do you think?
It certainly is going to accelerate the state debt and municipal debt situation for sure. Yeah. I think certainly the tax situation that Trump manifested actually did have real, at least short-term results in terms of allowing companies to spend.
Yeah, of course. When I shoot myself in heroin, when I shoot myself with heroin, I feel really good short-term. It's the long-term that's the problem.
I mean, so naturally, could they? You mentioned the Laffer curve. The interesting thing about the Laffer curve, which I'm surprised, right wingers love to bring out, the Laffer curve is a whole argument about maximizing taxation, whereas our conservative politics, that should be anathema to conservatives. You shouldn't maximize the revenue of the government, because you're supposed to be reducing the spending in general. So that I always kind of laughed at that one. And besides, the Laffer curve is a theoretical issue. Mathematically, it doesn't really hold up perfectly well, but that's neither here nor there. I think what will eventually happen, because Trump is also, doing what some of the other former administrations would do, which is we're still going to spend to a certain extent to get various programs we need. Some, understandably so, that would be kind of interested to see how it plays out, the infrastructure being one. But the thing is, because we're not reducing anything, but we are potentially minimizing some of the tax incomes we could have, that is going to create a potential challenge that we're going to have to deal with, and it's going to be through the debt instruments, because we're going to still have to acquire more and more debt. The debt, the debt ceiling argument's going to come back up again, as it always does.
Yes, endlessly.
Yeah. So I wouldn't say it's a disaster by any stretch of the term. I actually think there's some usefulness to that. I'd say it's kind of TBD. We're certainly not out of any sort of woods here by any stretch of the term. I don't know how it's ultimately going to play out, but it's certainly a very strong possibility that we could have a financial debt, or a municipal debt problem as a result of the lightening of the tax burden load. But we'll see how it kind of plays out. And certainly the budget didn't really adjust itself to accommodate either what Trump wanted on a sort of policy level, or at a general, like, hey, let's have a good, sensible budget kind of level. So I don't see it as an acceptable thing by any stretch of the term.
No. But overall, I don't think that Trump has been... okay, I'm trying to figure out a realistic assessment of Trump's impact on the economy. And I can't answer that question, because it seems to me that it's all in the court, on the side of the court of the central bank, of the Federal Reserve. I don't see that Trump can do anything really positive or negative. It just so happens that the situation makes him seem good, but I don't think that he himself is the cause of this not prosperity, but this stability.
Well, I think you can give him credit for the tax, situation did create, meaningful economic situation. I think people were potentially anticipating that. That's why the market kind of went up when he was in there. The tariff situation could go either way. People have a big anxiety of it, and that causes fluctuations in the market. But it could, in the long term, be better for people locally. It's kind of TBD how it plays out. But I agree, from going forward, because he did play the tax card already. Yeah, the Federal Reserve is going to, largely dictate a large amount of that, and that's largely due to how they control the money supply.
Hey,
and can Trump influence it? Yeah, he can appoint the next, he'll appoint the next head, but largely the group in and of itself is going to be making the decisions.
Yeah, what do you think of the current chairman? What's his face?
Yellen?
What?
Janet Yellen?
No, she resigned. She resigned.
I keep forgetting if she was
guy.
like
the new guy. Yeah.
Yeah, I don't know I unfortunately don't know what the new guy's doing right now, so I feel at a loss to comment. I'm out of touch, man. I thought Yellen was in and she was going to
Jerome Powell. Yeah, Jerome Powell. I mean, the guy is as milquetoast as they come. I vaguely
remember they're still playing up, like trying to maintain the cheap money where possible.
Yeah, that's a continuation of status quo. But yeah, because they keep Yellen kept making feints that she would eventually raise the interest rates, and nobody bought her. Nobody believed her. She was like the mommy that threatens to spank the kiddies but never actually does it. You know what I mean? But I'm just,
right. I mean, and in theory, because like the lower interest rates, and I keep this in mind, it always seems to fuck the local guys, because like if you're the kind of guy you're not investing in stocks for whatever reason, and you're trying to keep money in the piggy bank, you're the one who's getting screwed here, because that's why you're not getting any fucking interest on your savings bank. You're just literally putting money away. They'll pay you, a token. Like I have like sizable quantities of money in just a general savings account that I have as my, like emergency fuck you money. Mm-hmm. And that's like, getting, the return on that is ridiculous. I'm just having it there so I can have liquid cash on hand.
Sure. Sure.
But yeah, you get nothing from that. And, like I said, it's the average folks who are going to do that. And the average folks, if they're exposed to the market at all, it's usually through just some sort of mutual fund as part of their 401k. And those have largely been kind of okay, depending on how aggressive you want to be. But I've been seeing some slowdown in returns on them recently, but we'll find out. And, it's certainly, there's enough to be concerned about. But the thing is, again, with every kind of recession, or depression even, historically things turn around after a period of time, because people need,
because there's always a dip,
once there's a bear market, people want to make their money again. They buy when it's low, and eventually that brings it back up. But it can take a while to do that.
Well, anyway, going back to the original conversation that we were having, right? We were talking about these companies that are burning through cash in order to prop up their position within a particular industry. Prop up or potentially score a monopoly control over that business, such as the monopoly control that Amazon wound up having insofar as U.S. retail. Because let's not kid ourselves, Amazon basically is the monopoly of online retail. And by the way, you heard that they're planning on doing their own delivery system apart from UPS apart from UPS. You hear about that?
Well, they've been trying to experiment with that for a while. Like they have and still have like third-party kind of people, like local jokels, go and deliver your shit. Like I've had that at time. Now they've had trouble with that, because whenever I have a few years ago when they had the local yokels delivering, I've had some, like missing packages, people I think kind of potentially stealing things, like not good performance. But yeah, they're trying to figure that out, because they want to control that cost, because that's a cost outside of
and you hear the plan that they want to do now. They want to have a system whereby UPS delivery people or delivery people in general can go into your house to leave your package. That's a fucking cheerful thought.
Like it's funny. My dad just told me this the other day. I think it may have even been, if it wasn't a UPS guy, it was some like an Amazon type guy. Mm-hmm. My dad was outside working on his air conditioner, so he had the door open because he was going back in and out. And he's coming back to the house, and a guy is walking fast. He says, "Oh, I just left the package inside your house." He says, "What the fuck are you doing? Why are you going in my house?"
Yeah, what the fuck?
Yeah.
But no, apparently, you can have an app now or some kind of system whereby you give permission to UPS to go into your house, and they have like an electronic lock. They just tap something on the guy's tablet or whatever and opens your lock.
It's
Because
probably the same kind of system they use for when someone's showing houses in real estate. They have that kind of thing now where you just have the phone. It gives you a little keypad. You open it up. That's disturbing as fuck to me.
yeah,
I hate the fact, like, I don't let Alexa into my house. By the way,
the
I
Alexa,
shut
the machine, the
the Amazon's constantly listening machine. I think
or
Google.
Siri, yeah, they're all the
Yes,
same.
they're always listening. If you look in the T's and C's, they basically are. I even had a story where I may have said this, but I just want to keep people abreast that it's happening. I was talking to someone in the office about, hey, I bought like a certain kind of high-end lounge chair. It was an Eames lounge chair because I've
Oh,
been
nice.
refurbishing my
Yeah,
house. It's
nice.
my favorite. It's my favorite reading chair.
Yeah, sure,
So I
absolutely.
said to her, so I was like, yeah,
You got it with the Ottoman?
yeah, it always comes with the Ottoman. Yeah, for sure. I love it.
Okay.
I got black leather and everything. But needless to say,
I got the
so
real
I was
one.
The
Sorry,
real one. The real one. It's not a
Oh
knockoff.
shit!
It's the-
So that was like what, like 4 grand?
almost $5,000.
Oh, that must have hurt. Okay. Well, no, it's probably
it
worth
didn't
it.
hurt.
Long term, it's worth it. Yeah.
Long term,
Okay,
it's
sorry.
worth it, and it didn't hurt in the short term. But needless to say, so I was saying, yeah, I like it a lot, and I was talking about it, and we have the Siri system set up in our office. So I walk away, and she says, "You got to come here." I come back to the office. I said, "What's going on?" She says, "I haven't searched for Herman Miller or Eames chairs at all." And all we did was just talk about it there. So she was rummaging the internet for news, and she got a pop-up ad for the Eames lounge chair. We're like, how the fuck did you get that? And the only thing we could think of is that we were overheard.
Of course. Now, I'll tell you something even more disturbing that's happened to me several times. I've had conversations around my computer, and then later I check ads or whatever, and they're talking about that. I mean, the ads are about that thing. Okay, that's disturbing as fuck. Because I was talking once about literary agents over the phone. I got a call from somebody over a landline. Okay, I was talking with a friend of mine, and he was asking me about literary agents. Okay, I'm out of the ball game insofar as publishing, but I know a lot, and I didn't have any kind of information about literary agents on my computer. Okay, and I hadn't looked for any online or anything like that. So I talked to this guy over the phone about different literary agents. Okay, and I turned to my computer and started looking through it, and it was real estate agents that kept popping up, and I thought, well, yeah, the word, the agent, okay, and must have just assumed, because I kept saying lit agent, okay, and so the computer, the whatever was listening in must have not been able to figure out what I was talking about, and so landed on the closest approximation, which was realty agent instead of lit agent, right? I think that the computers are doing that. And
I have no doubt that they are, and I've seen enough coverage of this to pretty much believe that it is in fact the case.
well, and here comes the next happy thought. Okay, like PayPal, rescinds people's ability to get money if they're not the politically correct ideology, right? Maker support. There's been a big thing going on with YouTubers about maker support and that kind of shit, right? So the maker support. Something happened with Stripe, which is their payment processing service, and so now they're not able to pay out the money that they owe the creators who have been paid money by their followers, right? Maker support is similar to Patreon, okay? And so the issue is becoming now that if you say hate speech or something, you can be deplatformed. Now, what happens when you have like this Internet of Things, and you have all this internet shit going on, and your appliances, your fucking toaster, your refrigerator, your car? What happens when you start saying the wrong goddamn thing in one platform, say in Twitter? Are they going to like report you, and so you won't be able to drive your fucking car because you're accused of hate speech, and they're going to deplatform you from driving your car?
They will, and this is be the corporate speak behind that. They will talk about protecting their brand equity. We don't want our brand. Yeah, we don't want our brand associated with these things. So we're not denying anybody's rights to X, Y, and Z, but we don't want to be associated with that. And here's the thing that my fellow libertarian friends need to kind of shut the fuck up about and get on board with. The distinction between government power and corporate power is stupid and over. want to be in bed with each other. They reinforce each other. They're a manifestation of each other.
Yeah, exactly.
So the degree to which you think that, well, hey, it's a free company, they can do what they want. This is a little bit different than, a mom and pop store saying, I only serve, I only want to serve X or Y or Z kind of people. We're talking about big companies of which there's very increasingly less and less competition, able to dictate the terms of social service in broad strokes.
Yes.
So for example, let's take a comparable fact. Let's say you were in the 60s and you really believed in the Freedom Riders. Do you think, if someone was turning around and saying, hey, no colored people ever are going to go to a shop anywhere here in the South, you think people would accept that? No, they wouldn't. You're getting a different version of it. Yes, it may not be so stark right now, but it's getting there.
Yes.
And I think you have to be prepared to realize that, there are multiple forms of power above and beyond what is administered by the government. And ironically enough, the easiest way for your average Joe to try to influence anything, or should I say the easier way, should have been the government. Trump is a manifestation of that. We wanted to vote for a guy who would fuck with these, kind of companies, because you can't, ironically enough, you can't fuck with the companies directly. What are you going to say? I'll take my business elsewhere.
Yeah.
There's increasingly less elsewhere to go on that front. Now, the counterbalance argument to that, which I'll admit, could very well be the case, is to say, hey, if they have those social justice attitudes to such an extreme, they're going to either create their competition, or they're going to have other people going on who may not necessarily agree or disagree with them from an SJW perspective, but they're just going to fight them. It could be an international company, it could be Chinese companies. It doesn't really matter.
Well, the problem is that everybody says, oh yeah, they'll if they keep on being SJW and being so rotten about it, that the competition will naturally arise. It's too big of a capital investment. Who could rise up today to compete with Amazon? No fucking way. They wouldn't last 5 minutes.
YouTube is another example of that. Yeah, you've got your bit shoots and everything, but the thing is, YouTube, that has your people tied to it.
Yeah, exactly.
Viewership of YouTube.
We have
and
allowed
the infrastructure is huge.
Infrastructure, but we have allowed monopolistic companies to take over. And the neoliberals and everybody who followed Alan Greenspan, they were all in favor of monopolies because they said that at the end of the day, the only thing that mattered was the price for the consumer. But there are other social goods that anti-monopolistic practices gives to society, unquantifiable ones beyond the issue of price. And what is that? Choice. If you have a monopoly, you have no fucking choice. Yeah, sure, the monopoly can be able to deliver the product at a lower price or because of economies of scale. But the lack of choice makes the market hostage to the monopolistic player. And that's something that we want to avoid. We don't want to be hostages to this one big company. But that's what's happened. And tying it back to Amazon and Jeff Bezos and the CIA and the Amazon, the AWS, what's it called? The
AWS, Amazon Web Services.
Right. See, Jeff Bezos owns the Washington Post. Jeff Bezos is in bed with the CIA. He handles a huge chunk of their data processing and storage services, right? You think that there isn't going to be some sort of coordination? You think that there isn't going to be, not between Jeff Bezos and the CIA, but, the second and third tier people in his organization. They'll quietly, pass notes in class to each other, right?
Well, I think
it's basically the government by partnership with the private sector that is silencing people. That's what's happening.
Well, I mean, I'll tell you right now what's probably happening either on the down low or through, natural, living next to each other without Chinese walls. Mm-hmm. They're going to, because the CIA is on AWS, I wouldn't be surprised if the CIA has built APIs or any kind of input into the AWS data so they can see whatever they want to see that's being stored on AWS, or because they're, like I said, there are a few pinch points they can say, Amazon, Microsoft, Google, I want to see what's on your clouds and you're going to do it for me. And because they're very few big companies, they'll probably, and they have a lot of revenue at stake, they'll cave, as opposed to, I forget the name of that email service. You remember Jim Medicare would talk about it. There was one guy.
Oh yeah.
They wanted him to turn over
and he shut it down.
Emails, and he literally set it on fire and said, fuck you.
Yeah, and he sent them the key in such a small font that they couldn't scan it, and it was like thousands of pages long. And so there was no fucking way to do it because they'd have to manually input it. It was like fucking funny. I thought the guy was a fucking genius. And he fell on his sword, but he was the one guy. Nobody else is falling on their swords.
But yeah, Google will never fall on its sword. Microsoft will never fall on its sword. Amazon will never fall on its sword. And here's the thing that people should really come to terms with, and because I think people pay lip service to it, but they don't think they really process it. These guys don't want to come to terms with it. They want to just simply say, yeah, we will coordinate. Right. I mean, it's even down to the idea that, like, now I saw a news story that, 23andMe and all these other DNA testing, like, oh, find out what your ethnicity is. I was reading somewhere one of those companies was handing over, DNA info to the FBI.
That's how they caught that killer. That's how they caught that killer, the mass murderer. What was the name of the guy?
You're not talking about like the bomber guy or somebody else?
No. It was a recent guy. It was recently. Golden State Killer. That's the guy.
Okay.
The Golden State Killer was identified by that. Okay, because they compared the DNA to one of these services, and that's how they were able to get the guy. Joseph James D'Angelo was picked up by authorities in California who alleged he was behind 12 murders and at least 50 rapes in the 1970s and 80s, along with a number of burglaries. He was also known as the, quote, East Area Rapist. This is the Golden State Killer, the East Area Rapist. And it turns out that he was responsible for several multiple crimes, little foci of crimes in different places in California over the decades, because it was over 40 years. And they found him. I'm trying to find here the pertinent information. They find him basically by that. They found him by way of comparing DNA that they had from the scenes of the crime to some private database. And the DNA came close to a match with one of the customers. And they investigated that person because they knew that person was not the one. But enough of their DNA matched with the DNA they had of the Golden State Killer to realize that the Golden State Killer was probably related to that individual. So they investigated that individual and finally arrived at the suspect, and they got a 100% match on the DNA. That's why they're sure that they got the guy. Okay, but think of how they did it. Okay, they found a person who was related to the killer. And so you say to yourself, well, this is a good thing, right? A killer who had committed these horrible crimes, rape and murder, literally, right? He was caught. This is a good thing. The private corporation that collected all this DNA evidence was able to do this. And this is a good thing. Yes, of course, but it is easy to imagine circumstances where the government will be able to identify somebody for something that is not a crime, but that they will try to persecute that person as if it were a crime. And the private companies are acting as agents of the government, okay? And so therefore it becomes an issue that the corporations are just an extension of the government. And the people are the adversaries. The people are the victim of this tyranny.
And you guys got to keep in mind, like for the big enterprise level companies, many of them are doing business with the government, and they're big contracts. It's usually called the public sector segment in the businesses. If you ever hear that term, it's selling to the government. A lot of companies have big contracts because it's huge. Because the government usually goes through a vetting process, but you have a multi-year, in some cases, multi-billions of dollars of deal. That's big money. They want to keep on to that. They want to hold that. Of course, they're not going to rock the boat in any dramatic way.
No,
so don't kid yourself on this.
No fucking way are they going to rock the boat. No way.
So that's the most troubling aspect to me. I think the degree to which, and I think so. I'll give some positive note. I think a lot more right wingers in our neck of the woods see that, and I think they now are realizing, hey, there actually is value in social media companies. You are like a utility right now, and if you try to fuck around by saying, taking control of wrong think and censoring people to the point where like even Diamond and Silk are going to get a fucking strike. The most,
innocuous.
You could take Diamond and Silk to your mother, kind of thing. That's how innocuous they are.
Yeah.
I think, it's time to say, no, you are a public forum right now, and you have to abide by some rules. Will it be successful? God knows. Probably not, because there's always, ways to get around things. But I'm more optimistic for people realizing on a fundamental level that says, hey, the free market ideology, you don't need to continually accept it. as like an unquestioned thing, and people are realizing that the blurring lines between business and politics is such that you really do have to watch out for these motherfuckers.
Yeah, because these motherfuckers
they exhibit these cultural attitudes that are condescending and treat you like shit. Is not something you have to countenance just because they're private.
Yes, exactly. Okay, yeah. Just because they're private doesn't mean that they're fucking angels. Okay, yeah, and just because it's government regulated doesn't mean that it's evil. I mean, that's the thing that it drives me a little bit up the wall, because you see, there are so many instances where government regulation is essential. Okay, to claim that all government regulation is bad is just stupid, because it's not. Look at traffic lights, and I want to leave this because we're coming up on an hour, and I want to leave this last imagery in your mind insofar as the issue of regulation. The government regulates traffic lights. You get to an intersection and there's a traffic light that stops one street to allow the traffic of the other street. And nobody has a problem with it because it is beneficial to society. If there were no traffic light, if it was just an intersection, sure, the people would be able to work it out on their own, but it would be far less efficient. The traffic would be a lot slower because people would be constantly worried, and paradoxically, there'd be more likelihood of accidents than if there's a traffic light that creates an efficient regulatory environment so that both streets can flow and traffic can move swiftly in each direction. Okay? So regulation per se is not bad, and the free market, just because it's free market, is not necessarily good. They are tools to make a better society. Okay? And they are good or bad tools to the degree that they are used wisely. And that's the last thought I want to leave on this podcast. This has been the Coach and Benway Show. I am your co-host, Coach Red Pill.
And I am Dr. Benway, and I am suggesting to everybody, buy some Tesla stock.
Don't do that. Don't do that. We don't want to get hit by an SEC fine. Okay. Do not pay any attention to any kind of. I think I'm going to have to cut that out.
Short Tesla stock.
Okay. So there's two contradictory advices.
I know.
Buy it and short it. There.
Buy it and short it. So therefore I've washed it clean. I told you to do nothing.
Yes. Okay. So on behalf of Dr. Benway, it's been a pleasure as always, and take care, and we'll see you next time.
Take it easy.